This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
We did see Mattel. We talked about it actually after the close yesterday because they came out with their earnings, and man, the stock really rallied big time today on heavy volume. And this is after the company reported. It actually rallied earlier in the day. I think by the end of the day, it was lower like the overall market.
Yeah, it ended up finishing the day up by about 0.4%. So like a lot of the stocks out there today, kind of all over the place.
But up 6% earlier. So let's get to it because the company did report sales and profit that beat analyst expectations. With us and delighted to have us back with us is Ynon Kreiz, Chairman and CEO of Mattel, on the phone in El Segundo, California. Forgive me, Ynon, there's a lot going on. Try to keep track of it. I know you've had a busy plate as well. First of all, congratulations on Barbie, because we have been talking about that with you for a while. I almost feel like since the beginning, and your strategy of bringing Mattel toys to life. What does the success of the movie mean to you and the company?
Yes, that's right, Carol, and thank you for having me on the show. As you remember from the very beginning, this was never about just making a movie. This was about creating a cultural event, a societal moment. And we could not be happier where we are today with such strong performance right out of the gate. The first week with over $500 million in gross in box office receipts, and more importantly, the audience reaction, with people going 2 and even 3 times already in the first week to see the movie. Very broad audience, including men, and a very strong performance internationally. That is stronger than the U.S., and it's not because the U.S. is not doing well. It's just a very strong performance across the world, and all in all, it really is, an exciting moment and a showcase for the cultural resonance of our brands, our ability to attract and collaborate with top creative talent, and our marketing and demand creation capabilities to create what is now, a cultural phenomenon.
What does it mean for merchandise? I mean, I've actually bought some Barbie products, to be quite honest. I grew up with Barbies, introduced them to my daughter. My older sisters introduced me to them, and it's nostalgic for me. But I also have been in the stores where all ages are snapping up products. How does that move the needle for you guys financially as well? All those deals.
Yeah, we did see incredible take-up of the movie-related merchandise. We have more than 165 different consumer product partners, different industry, different products all over the world, and we're seeing incredible excitement. And as you say, product is selling out quickly. This is movie-related merchandise.
Does it financially have a financial material impact on you guys?
Well, we haven't broken it out, but this is already part of what we expect will be an uplift in Barbie sales in the second half. This is really where it kicked in. And of course, don't forget the halo effect on the overall Barbie brand with a significant improvement in consumer demand already in the third quarter, and expect Barbie to grow in the third quarter and for the full year.
Ynon, you called it a cultural moment, and certainly that means that it can polarize some people, at least here in the United States. Got to ask about the high-profile people on the right who've criticized the film. Ben Shapiro made this 40-minute YouTube video. It's been viewed nearly 2 million times. He says he destroys the movie. He actually burns Barbies in it. Elon Musk says if you take a shot every time Barbie says the word patriarchy, you'll pass out before the movie ends. How do you react to that criticism?
Look, Barbie has been a flag carrier for diversity and inclusivity. Barbie inspired the limitless potential in every girl. And the genius of Greta is what she did. She took this message, that focuses on female empowerment, and made this movie appealing and relevant to everyone. And people who go to the movie, whether you're a Barbie fan or or looking to be entertained and inspired by a modern day interpretation of one of the most iconic brands in modern culture, this movie will be an experience for you. And what we believe is this movie will recontextualize the way people think of Barbie and what Barbie means for the world. And we could not be more proud of the messages and the unique voice that Greta has in this movie.
Well, and I'm curious too, does it mean that we're going to see a Barbie sequel, or is it a case of you guys move on to other toys?
We haven't announced a sequel, and we're still barely a week into the release.
But you know how we journalists are. We're like, okay, now what?
What's next?
No, you're not alone. You're not alone in asking the question. But of course, with such a success, such a phenomenal success, of course, we'd be looking to extend this. And we've always said that our goal is not. This is broadly not just about Barbie. Is we're not looking to create single movies, but to build film franchises for the long term. And of course, this is part of our strategy in terms of capturing the full value from our intellectual properties.
Ynon, does that intellectual property, be it in movies or streaming series or what have you, how you guys, whichever ways you go, does that ultimately become a big generator of revenues?
Yeah, we absolutely said that our strategy in capturing the full value of our IP outside the toy aisle can be meaningful in success, and we're looking to scale this. This is not just about a movie or a TV series. This is about participating in highly accretive business verticals outside the toy aisle that are all driven by big franchises, big brands, and in some cases, these verticals are larger than the toy industry. So we believe that we have the assets, the capabilities, the relationship, and with the Barbie movie, this really positions us in a very strong way as a key player that can participate in these verticals and create meaningful shareholder value and build a meaningful business out of this.
Ynon, it's like Carol said, this has been a busy week for you. Got to ask about the big news yesterday, the co-president and COO, Richard Dickson, moving on to be CEO of The Gap. Let's get your comments on that. How big of a loss is this for the company?
Richard is a friend and has been a great colleague and partner for me since I joined the company. But one of Richard's biggest accomplishments is that we built a very, very strong team of leaders, of designers, of innovators, of creative talent within the company. And the executives who take over from Richard, between Lisa McKnight, who has been the head of Barbie since 2016 and very much managed the transformation together with Richard,
right?
And the head of Dolls in 2019, and Josh Silverman, who has been at Disney for 20 years. Yeah. That is now where he oversaw all of Disney's third-party relationships with licensees. Now running our non-toy commercial activity.
So you're not worried.
Two world-class leaders really taking charge, and we could not be more confident of our team that is running this business.
Ynon, 10 seconds, got to be quick. Did you give tips to Will Ferrell on playing a CEO of Mattel?
I can learn a lot from him on the comedy side, but I'm a big fan, and it's great to see him playing the role.
Well, congratulations, and we're looking forward to following more of this story and what comes next. Ynon Kreiz, Chairman and Chief Executive Officer at Mattel, on the phone from El Segundo, California. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
We do want to get to another company and stock that was certainly in the news today. And we're talking about Chipotle Mexican Grill. The stock under pressure today, down the most since March of 2020 after second quarter sales fell short of expectations and third quarter outlook suggested maybe momentum is slowing. So keep in mind, though, a little perspective, stock has been on a run in 2023. It's still up, about 35%.
Yeah, expectations, it's fair to say, were very high going into this print. We got with us right now, and we're very happy to have him here, is Chipotle COO Scott Boatwright. He's the Chief Operating Officer there. He's with us on Zoom from Newport Beach, California. Scott, how are you this afternoon?
I'm well. Thank you for having us on this afternoon.
So let's go through yesterday's numbers and what did disappoint analysts. Give us your take on the quarter.
We still feel like we had a really strong quarter, up 7.4% in comparable sales, the highest margin numbers we have produced as an organization in quite some time, coming in at 27.5, diluted earnings per share at 12.32, all really in line with consensus. We felt great about the quarter, specifically that the comp number was driven primarily by transaction growth. And so we're still excited about Q3 as we look at what Q3 will end up for our organization, where we're trending and what we anticipate. It's still driven by healthy transaction growth. And so our full year guidance still remains unchanged. I think analysts were a bit concerned about the comp sales estimate for Q3. But keep in mind, there are other things that we have in the pipeline. We still have pricing leverage, which we believe as our economic model still holds up. We feel like the Chipotle
meaning you're confident you could still raise prices even more?
I think I say that to say I think there's still room yet. And then we have a fourth quarter LTO promotion that we will launch sometime probably around the September timeframe. And so I say that to say we still feel great about the year. We feel great about the healthy transaction growth that's happening, that's driving our comparable sales growth. And the story still holds for the year. So we still feel confident.
Listen, you're the Chief Operating Officer, so how things work and operate is really important, and how you can make the systems more productive and more efficient. Talk to us a little bit about some of the automation technology that you guys are doing and playing with. About a year or so ago, I caught up with your CFO, Jack Hartung, and talked about the amount of hours and how labor intensive it was dealing with avocados, because you guys are all about fresh guacamole and fresh avocado. So talk to us a little bit about automation and how that helps the growth story going forward.
Yeah, it's a great question, Carol. I think there are a couple of things that really fuel our economic model. One of those I'll speak to very quickly is around throughput. And we still have throughput advantages that have yet to be pulled through. And so we're working aggressively as an organization to get back to the throughput levels and efficiency levels we experienced in the brand back in 2017 through 2019, really pre-pandemic, before there was this massive shift to digital. And the new people in our organization today aren't accustomed to the speed at which we can deliver the Chipotle experience. And so we're really leveraging that and flexing that muscle here in the upcoming quarter to really get back to our throughput prowess yet again. And also leveraging cobotics where it makes sense to really remove some of the routine, mundane tasks like coring and pitting avocados each day in our restaurant to really move that labor to more consumer-facing engagement, and creates a better experience for the team member and a better experience for the consumer as well.
Scott, can you just give us some numbers behind the automation process when it comes to peeling and coring avocados for that guacamole? Like how long does it take a person to do it, and how long does it take a machine to do it?
Yeah, it takes one individual about 50 minutes to complete one batch of guacamole. That's starting with a fresh case of ripe avocados all the way through the hand mashing process. So we think avocado can remove about 50% of that time.
Wow.
And really make it increasingly more efficient to get through that process and get towards more guest-facing activity.
Yeah, for those who are watching on streaming and YouTube, they can see some of avocado. First of all, I just love the name of it, but they're actually seeing the process of how it works.
But do you lose some of that vegetable? Do you lose a little bit of it with the automated process?
That's one of the things that we are testing for, Tim. As we think about avocado's effectiveness in restaurant, it's got to be able to deliver on a few things. It has to be able to protect this incredible ingredient as we bring it into our restaurant. It has to continue to be as food safe as it can and should be in our restaurants, and it has to deliver on our specification. And so if it doesn't meet that criteria, then it doesn't move forward in its testing protocols. But early days, we're very excited about the opportunity and feel good about where the product is today.
All right, what about workers? That's the other thing, right? You don't want turnover. You want to train people and have them stay. So one of the things many years ago, I was very impressed with what was done by the company to hold on to workers, to promote workers, to keep them in the system. So talk to us a little bit about manager turnover and what you guys are seeing in the hourly turnover.
Yeah, great question. I think those early investments that you're referencing, Carol, have paid huge dividends for our organization as it relates to retention and turnover specifically, and then overall development for the organization as you think about the growth that is ahead of us. We are currently experiencing all-time low turnover numbers for the brand. And that's throughout our salaried ranks and our hourly team members. And so we feel like more and more team members are coming into the organization. They see the opportunity for growth, advancement, and to hit their career goals. And they're met with an organization that has very competitive wage rates across the industry, across the United States, and is very competitive in the industry, and what I believe to be industry-leading benefits in total that really capture things around financial health, mental health, and personal health.
Is there still pressure, though, to raise wages? Give us an idea. I mean, that is such a big part of, we're coming off a Fed meeting yesterday, and we talk a lot about wage inflation, and that is still sticky. Is that still, you can't back off? Are you paying up more, or is it leveling off?
Carol, there's always inflation in the wage markets, as you're well aware. And we go through a twice annual merit process for our team members. And that's a practice we've had for many, many years in the organization. We're experiencing about 5% wage inflation, which is anticipated and built into our annual plan, but nothing extraordinary.
Do those benefits that you talked about that are not directly impacting a higher hourly wage, do those work? Do those create a stickier workplace?
It's a great question.
Because people, at the end of the day, people are gonna want more money.
It's a philosophical question. It's one that I talk about often. So thanks for asking the question. If your wage rates aren't working hard enough for you, then the benefits conversation never comes into play. And it's Maslow's hierarchy. If you're not meeting the basic needs of your team members and your workforce, you can have all the benefits in the world. But if they're not able to meet the needs of making rent, having food on the table for their families, then those benefits can't work for you in your behalf. And so what we try to do is maintain a competitive wage no matter what market we operate in the country. And that allows us to have a robust benefits conversation that really creates the employee value proposition, keeps people engaged, keeps them bought into our vision, our purpose of cultivating a better world, and looking for more opportunity within the Chipotle brand.
All right, so just got about 30 seconds left here, Scott. When you look at the horizon, 6 to 12 months, feels upbeat, a little cautious? How would you describe it?
I'll tell you, Carol, I'm really bullish. I know this summer there are a lot of U.S. travelers that are out of the country, so we're seeing a little bit of softening in demand across retail and in the hospitality space. I think it rebounds very quickly in the fall. Consumer spending is still obviously a big part of our economy, is still driving our economy. I feel good about where we're situated from our value proposition perspective. We're still a low-cost provider that provides abundance, variety, and a very high-quality, great-tasting meal at an affordable price.
All right. Well, so glad we got some time with you, and our best to Brian as well as Jack. Scott Boatwright, thank you so much. Chief Operating Officer at Chipotle Mexican Grill, joining us on Zoom from Newport Beach. And
why do these interviews always make me hungry?
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Kind of reading for this segment, I came across, Tim, something from Voice of America, and it talked about how climate change gives rise to increased precipitation, higher temps, higher humidity, conditions under which mosquitoes thrive and multiply. And so it got into some new research from the World Health Organization that even dry weather enables mosquitoes to breed. And so getting into just a lot more mosquitoes out there and the implications of it with these weather patterns.
Here's something I didn't know until you told me. Scientists say that dry weather makes mosquitoes thirsty, and when they become dehydrated, they want to feed on blood more often.
Love that. creeps me out a little bit. All right, so let's get more on the implications of mosquitoes and their attraction to us all. Conor McMeniman, he is professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, which of course is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Conor is with us on Zoom from Baltimore. Conor, we all know mosquitoes. We all hate them. They drive us crazy. Tell us a little bit about the report that you guys just did there over at Hopkins.
Yes, so we recently in Zambia actually created the world's largest multi-choice smell test for mosquitoes. We all know from our backyard barbecues and picnics that mosquitoes tend to target some humans more than others, and some of us are more alluring to mosquitoes than, say, our partners or our family members. And so we were really interested to create a way to firstly test this. And what we found was the scent of certain humans, the chemistry of the scent of certain humans actually dictates how attractive we are to the mosquito. And in this particular instance, it was the mosquito that transmits malaria in Africa.
So it's not, as my mom always said when I was growing up, if you eat sweet things, you're going to have sugary blood and, you know, the mosquitoes will get you. I'm sure you've heard that before, Professor. In all seriousness, though, this is a huge issue around the world because of malaria, because of mosquito-borne illnesses that affect so many people each and every year. So I'm wondering what the implications of this study are for the way that people can protect themselves. If we know what attracts and what doesn't attract mosquitoes, how do we extrapolate that data and put it to use in the real world?
Yeah, absolutely. I think a really a molecular understanding of the chemistry of mosquito attraction to human scent could be really used to effectively inform the risk of being bitten by mosquitoes. And as you pointed out, malaria still kills around 600,000 people per year, mostly in sub-Saharan Africa, children aged under 5 years, and also pregnant women. So in addition to perhaps informing a way to prevent nuisance biting, we could also potentially use an understanding of the chemistry of attraction in mosquitoes towards humans to develop new solutions to combat mosquito-borne diseases, and also make new methods to stop them biting us here within the United States.
So do we know exactly? All right, first of all, you're saying if the mosquitoes don't come after us, lucky for us, and it's not like that there's something wrong with us in terms of how we smell. But I'm just curious, is there something specific in particular of what really does attract a mosquito to one individual versus another?
Yes, so our research suggests that individuals who have body odor signatures that are enriched for a class of molecules called carboxylic acids, which are typically chemicals produced by the natural microbiota or bacteria that live in our skin. Individuals with high levels of these airborne carboxylic acids, particularly light forms of these carboxylic acids, are actually more alluring to mosquitoes. On the flip side, we also find individuals that are not so alluring to mosquitoes. Individuals who seem to be depleted of a lot of these carboxylic acids and also enriched for some other chemicals that are also putatively acquired through the diet. I think this is a really exciting area for future research.
So is there a simple message to what people should and shouldn't eat to make themselves less or more attractive to mosquitoes?
Yeah, so I think this is still an emerging area for research. The molecule that we found enriched in the scent signature of an individual that wasn't very attractive to the malaria mosquito was actually a chemical called eucalyptol, which is found in a wide variety of herbs and also spices. This is an emerging area of research. I think that we definitely need to perform future research and perhaps clinical trials to actually evaluate the impact of eating certain foods on how attractive we are to mosquitoes. And a lot of this is, the source of a lot of anecdotes that also get flown around, as we were talking about earlier. There is no simple solution at the moment, but there are protective measures we can implement in the interim to protect ourselves against mosquitoes.
Is climate change making your job even busier?
Yes, I would say so, especially here within the United States. I think the 8 recent acquired cases of malaria that we've seen in the southern part of the United States tends to suggest that we need to remain continually vigilant against mosquitoes. They do like warm tropical weather, many of the species that transmit diseases around the world. So I think we need to maintain sort of continual vigilance against mosquitoes. Is
the solution today, the best solution today, still sort of the most mundane, just mosquito nets?
Yeah, so mosquito nets are one potential way to stop mosquitoes biting us. Screening your home, also cleaning up debris and potential breeding sites in your backyard where they might like to sort of hang out and sort of relax. Perhaps the most practical way we can use to prevent mosquitoes from biting us is applying an EPA-registered insect repellent. Why EPA registered? Because they've been tested for efficacy and also safety. Right. There's a range of different synthetic compounds like DEET that are really effective. Picaridin, IR3535 is another active ingredient.
Conor, we got to run, unfortunately, but a lot of good advice there. Conor McMeniman over at Johns Hopkins Bloomberg School of Public Health. This is Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up the Thursday trade. And what a different picture, certainly on the equity side of things, from where we were a few hours ago. Had a rally, and then it just kind of came undone. And so we're looking at stocks pretty much at their lows. And, there's a couple things going on. Katie talked about Japan earlier, the Bank of Japan, but also, we had some upbeat economic news here in the United States and have a 10-year at 4%. So that's a big move up.
Let's get into all of this with Sarah Ponczek, financial advisor at UBS Private Wealth Management. She joins us on Zoom in Fort Lauderdale, Florida. Now, I don't know if everybody listening and watching knows this, but Sarah used to be our colleague here at Bloomberg News.
Of course they remember.
Okay, good.
I did. And I've got to say really quickly, I'm so lucky that I'm here with both of you because, Carol, I hear you're checked out going on vacation. And, Tim, I know you just got back. So.
I did, yeah.
We're like passing a baton for a little while.
It's good to see you, Sarah.
Great to see you both.
Okay, so let's talk markets here because as Carol said, there was a big reversal today. Let's get into today's trade because of the economic data that we saw, there was a lot to love in there earlier today with inflation coming down, another signal there, some good numbers when it comes to the jobs front, some good numbers when it comes to GDP. What do you make of today's reversal?
So when you look at the market reaction today, some might question, okay, are we back to a world in which good news is bad news? And that sounds very strange, but we all know what that means is just that when we get good economic data, does that mean that it gives the Fed more clout to keep interest rates higher for longer, which the market might not like? So that might have a little bit at play with what we're seeing with the market reversal. But I would point out that you really don't want to extrapolate too much from one day's trade, because if we look at how markets have been trading over the last month or so, as recession risk has been receding. I know we hear many more people nowadays talking about a potential soft landing. Can the Fed pull it off? But the market has been trading as though that might be the case. So, all year long, we've been talking about this really top heavy market, growth leading the way, tech leading the way, small caps, for example, underperforming. But if you look at the last month, it's actually pretty interesting. The Russell 2000 small caps have outperformed. The Russell 2000 up about 9%. Meanwhile, the S&P, the market cap weighted version of the S&P, which really takes technology stocks, those mega cap tech names into effect, up about 5.5%. And this hasn't been the case all year long. if you look at that equal weighted version of the S&P that takes financials, energy, industrials into account just as much as those tech names, it's actually outperforming the S&P. And we see those more cyclical sectors of the economy like energy, financials, industrials actually performing as the best performing sectors in the S&P 500. So today, it's a little bit wonky seeing the overall reversal
Sarah,
in the market.
Tim
but it's interesting.
Tim is mouthing me. So broadening out, which is something we've been talking about like over the last week or so, broadening out. But having said that, when you've got a 10-year at 4%, we'll see whether or not it stays there. I mean, moving into the fixed income side of the market, moving into cash, you can actually make some money here when we're still not quite sure what the way forward maybe might be.
100%. Look, we're big proponents of the fixed income market right now and of bonds. We feel as though there's still a good amount of risk in the stock market, in the equity market. Yeah, a lot of people are getting a little bit more comfortable with it, but bonds right now are a great place to park your cash. And you mentioned bonds and cash, Carol. I would really caution investors, if you have a lot of cash on the sidelines, great. You're getting 5+% right now probably on your cash. But remember, that rate is not going to be there forever. Reinvestment risk is very, very real. So right now, if you look at the bond market, all-in yields look really attractive across municipals, corporate bonds, and government bonds. So it makes sense to spread yourself out, extend your duration a little bit more, lock in those all-in yields, and then not only are you locking in those rates for years to come, but remember, if we do see a reversal in yields coming down, you'll also get that price appreciation, that negative correlation to the stock market potentially, should we see a recession or some type of softness there.
I'm wondering if there's sort of a flip side to Carol's question, which is this money on the sidelines now having FOMO and saying, wait a second, I missed out on this 20% rally. I've been in fixed income. I've been in cash. Now that money being put to work and extending this rally in the stock market.
I think many people would argue that the 20% almost rally we've seen in the S&P 500 is due to just that, Tim. You're very, very right. I think we've already seen FOMO take place in the market, and that's why we have seen performance chasing in some of the best performing stocks and best performing industries and sectors in the market. They just continue to lead and lead and lead. And that's why we were talking about this broadening. Now you question, okay, are we going to see more flows into the laggards because people feel as though maybe you can't keep chasing those names quite as much? And yes, if you look at the flow data, I've looked at the flow data before, across ETFs, mutual funds, there's definitely been evidence of that, Tim, of money flowing from cash into stocks. Because yes, while it's great that you can get a 5% return in cash, if you're someone who last year got nervous at the lows, you sold when, say, your stock portfolio was down 15 to 25%, you went to cash, well, congratulations, you've made 5% on your cash, but you've also missed out on this 20% rally and comeback, and you actually end up in a worse position by just sitting in cash for so long.
You sound like somebody who's managing money. I'm just going to say.
I wonder why.
What's the big risk right now, though?
The biggest risk, I think, I would say the biggest risk is probably that inflation does not continue to come down. And inflation is a lot stickier than most people expect it to be, meaning that the Fed is going to have to continue to hike interest rates. That's what the market is most scared at this point in time. And if that's the case, it also presents a risk for bond markets as well.
I think that's a really good point, especially when you have, Jay Powell yesterday saying, hey, folks, 2% inflation, maybe we don't get to that about 2% until 2025. So I'm looking at a calendar. It's 2023 and we're just halfway through. So that's a long ways away.
It is a very long ways away. And even just to the next meeting, we have this very rare 8-week stretch. We've all learned over the past 2 years that a lot can change really quickly, when it comes to data and for the Fed, because as we all know, Fed Chair Powell loves to say that they're data dependent. He said it again yesterday. He'll say it over and over and over again until it's drilled into everyone's minds that they're going to watch CPI data. They're going to watch the employment data. And although what they said yesterday might stick today, if the data changes, so too will their message 2 months from now.
I can't remember. I think it was on Surveillance this morning. I don't know whether it was Lisa Abramowitz or one of their guests said that it's almost like Jay Powell, when he was at the podium, had a little yellow sticky that said, data dependent, like keep the door open.
I would say say at every meeting, every press conference he gives, it's ingrained into his mind. I think it's ingrained into my mind. It's probably ingrained into your minds now too. We hear it over and over and over again.
Yep.
That and long and variable
I was
lag.
just going to say that, Sarah. Long and variable lag. That's the other
You read
term.
my
They
mind.
used to call it like garage bands, right? Long and variable lags.
And we could make a song
Jay
out of it.
Powell.
Exactly.
Jay Powell and the data dependence.
Exactly. Sarah Ponczek, have a great weekend. She's financial advisor at UBS Private Wealth Management on Zoom from Fort Lauderdale, Florida. Of course, a former Bloomberg colleague. Great to check in. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.